In this video, we are going to break the myth of opening gap ups and gap downs following these simple steps. Step 1, identifications of buying and selling pressure. Step 2, identification of right supply and demand. Step 3, right swing high, swing low, and retracement points. Once you identify this, you will not be having a fear of whether the market will open gap up or gap down tomorrow while sleeping peacefully in the night. Let's start with the video. Let's understand buying pressure and selling pressures. Starting with selling pressure. Selling pressures has been marked out at the current scenarios like 1, 2, 3, 4, 5. Then we will see for a buying pressure, which is marked here as 1, 2, 3, 4, 5, 6. Right? Let's talk in the parameters of the same. Why does the market tend to create a movement? And how does the market tend to move? You have to remember one thing. Whichever direction the market is moving, market will always tend to create a wick pressure first. Post the wick creation and the pressure, the market will tend to move. Not directly. This is the standards of the market. The indications is always given in the market. Same way for the selling pressure, you will see the wick from the top to bottom and then the continuity with a retracement or else without a retracement. But wick creation is very much mandate into the markets. In the scenario, we will look as this as a buying pressure zone and this as a selling pressure zone. Hope you guys understood how does the market tend to create the pressures before changing the structures. In the scenario, market tend to create a wick, then the market came into a POI zone. In the POI zone, market gave a break and continued. In this scenario, what do you notice? The market created a pressure. With the pressure, the selling started, right? Market always tend to show you which side of the movement will start and which side of the movements will get in the pressurized allocation points, right? Same way, the market tend to create a movement over here, went into a consolidation as for you guys, but this is not a consolidation, this is a small POI range. With this POI range, market tend to break, right? Once there was a break, what did market tend to do? Market followed a small price actions as every point of actions. Market created a selling pressure again, right? Always remember, candle of the color doesn't matter. Only thing that matters is the directions, right? Let it be in a smaller position accurations or else in a bigger position accurations. If the market has shown a pressure from the upper side, right, with a body towards the bottom, there will be a selling coming soon. So it was the same selling what you notice. But at the immediate state of action, market tend to create a wick towards the long because the position of wick was in the bottom and the body was on the top. Market tend to move in the opposite direction, right? So this is how you look into the perspectives of the market. If the market is saying you with a wick creation in this scenario, what do you notice? Pressure started at this point market came down, right, went up. At this point of action there was a small price actional point. With this price actional points, what did market tend to do? Market created a break. Post break, there was an inducement S2B1 creation. With the S2B1, market tend to come down, right? So this is the price actions that you have to be majorly observing. Do the back testing, do the forward testing. It always works. Pick up a random date, do a back test on a random date so you'll understand why that movement has come at first place. Same scenario over here. The position was indecisive in the first. The second candle pressure was higher in towards the buy side. Hence, the position started moving slow and steadily, right? Post slow and steadily, what did the market tend to do? Definitely, in this zone of actions, the premium won't increase, right? No doubt about it. But one thing you guys have to remember is that at this point of action, the wick generation was towards the short, correct? So what did market tend to do? Market went up, created a small parallel inducement. With that, a wick generation was towards the top and the body towards the bottom, and market continued the movement towards the short. Okay, keep that in mind. Always market will play on this movements without market not indicating you the market won't move. That is the major things that you guys have to understand very clearly. Okay, so what is the things that you will be following over here? You guys will be following a simple setup. How do you identify the pressures? You will identify the pressures with the inducement S1 and S2, which is also called as S1B1, S1B2, and S1B3, and S2B1 and S2B2. Right? These are the only setups that you have to identify. With the setups, hold the trades to the mathematical calculations and be in the directions of the market. Right? This is how you identify a selling pressure or a buying pressures in an indices. Let's move in looking towards allocations of supply and demand with following the selling and buying pressures. Previously, we saw how does a buying pressure and selling pressure works. With buying pressure and selling pressure, let's look into the movements with supply and demand. When retailers look a red candle as supply, we will consider it as a demand, and when retailers look green candle as a demand, we will look and take consideration as it's a supply. Let's look into the markets. Right at the current stage, we have a demand over here. With the demand, there is a retracement. How much will it retrace as per the market charts? As per the market charts, the previous POI range or the retracement point will be your current retracement price of actions. Post that, what will be the movement allocation that you will be looking for? The movement allocation will be as per your previous demand. Right? Post the previous demand was completed. What are the next step? Following through the same measurements of the previous retracement point. Right? We had got a crossover of the first point of action. We will double it. Market took a rejection from 200% of a point of actions. Right? Whatever your previous demand was the allocation point, that will work as your current. At this scenario, what do we notice? There is a break of the 100% of the previous demand. What we'll be doing, we will be multiplying the demand range by 2, and we will look for a reversal from 150% of the second demand zone. In this scenario, the market took the rejection from the same point of actions. What are the next step that we'll be allocating over here? The next step, whatever the previous supply is there in the action, that will be your first rejection point, what you will be identifying from that point of actions. Right? Post that, what are the next steps? Whatever your previous supply retracement point will be there. In this scenario, this is the supply retracement point, so this will act as your current demand point of actions, right? Post the demand point of actions is generated. What do you notice? Do we have an inducement and a POI range at this point of action? Yes, we do. Post that, what are the next steps of actions that you will be following? You will be following an inducement. With the S1 setup, you will execute the next supply as per the previous. What do you notice? There is a break and there is a continuity. With the break and continuity, we will multiply the plan of action. What do you notice over here? The market tend to take the rejection from the same point of actions. Then the previous day to the next day, the market opened with a gap up open situation. There was a rejection in the continuity, and we got a buying pressure allocation point. Right? What are the next steps that you will be looking at this scenario? The next steps you will be looking as per the previous supply, your current action plan will act. In this scenario, where is the last previous candle point? This will act as your current supply, and that movement will be seen in the live action plan at this stage of actions. Right? Post that action has been prepared. You see a red candle coming in. How do you look into the perspectives? The perspectives will be looked into two point of actions. In this action point, the one will be your previous retracement point. Second will be whatever the candle in the inducement range, whatever the zone of inducement that will act as your retracement point, right? So step one, allocate this point of action. Yes, definitely the rejection is taking. Step two, check the inducement range. If the market is in 150 or 200% of the inducement range, definitely market will take a rejection from same point of actions, right? Did the market take the rejection? If we notice over here, let's allocate the 200% in a side action so that it will be easier for you to understand, right? So in this action plan, what are the next steps that you'll be looking here? The next steps you'll be looking is whatever the previous supply in the action has been generated from the wick range till the body of the closure, that will act as your current next movement plan. When it acts as a current next movement plan, you have to make sure only one thing, that is, you should have a closure at the first point of action. Do we have it? Yes, we do have a closure. Post that, did the market give a break in a structure? No. So, what you will be doing? You will be multiplying your previous supply and allocating in the same directions from the retracement point of action, right? Post you have allotted from the previous retracement point, what do we notice over here? Market tend to take the rejection from the same point of actions, right? This is how you look in structures of allocating supply and demand with the selling pressure and the continuity of the markets, right? So let's continue. What are the next steps that you have to look? All of the sudden we have a downtrend started at this point of action, right? So we can consider it as a downtrend for a day. Yes, definitely, because the market on that day, it was in a bearish movement, right? So what are the next plan of actions that we can look over here? First, we will be starting in the considerations as per the previous moment allocation, right? So which is the previous moment allocation? This is the previous moment allocation. This will act as your one. Once it acts as your one, what do we notice? We have a proper rejection point of action. Yes, we do. And do we have a retracement? Yes. This is your previous retracement. As per your previous retracement, you have got the current retracement, right? Post the current retracement is done. Look into the way of structures in two ways. First, allocate your previous measurements of the demand. If there is a continuity, look for 150% or 200%, right? This and all should be always in a mathematical directions. Don't go against the mathematical directions. Suppose there is a completion and there is a break. The market gave the gap down opening at that point of actions because our mathematical number was at 22,313 at this point of action. Right? This was our mathematical edge number. So with that edge, market tend to take the reversal again. Right? So at this point of actions, what are the next steps that you will be looking? Allocating the same thing repeatedly is the only boring thing you have to do because that is how the market will give you the moment. I will not say you that markets are interesting. Markets are always boring, and that boring things makes things more interesting because everyone can draw a supply and demand. Till the time you guys don't understand which exact point to be taken, you won't be able to draw the proper supply and demand, right? At the current stage of action, market tend to take the rejection from the same action point. With this action point, we had got a reversal of a small retracement, what will act as the previous supply, what and which will act as the previous supply will get converted into your current retracement point. Post the current retracement point, whatever your previous movement is in the allocation, that will work as your next target point of actions, right? So when the next target point of actions is allocated, just make sure you're following the mathematical rule and you're in the directions of the market. And what are the next steps that you'll be looking over here? The next steps we'll be looking is of gap up and gap downs. Previously, we worked on the supply and demands Currently, we will work on the major circumstances of the fear which you guys have at night, whether the market will open gap up or whether the market will open gap down. Always remember one thing: gap up are always in the directions of bullish mathematical edge, and gap downs are always in the bearish mathematical edge. Right? To check the circumstances, let's look in one of the perspectives of the market price action. Right? In this scenario, let's take the swing low as this, the swing high as this, and your retracement point as this, right? And let's do the math in the direction and check which side did the market open. Swing high 22556.10 minus 22,328.90. What is the formulative number that we have got? 227.2. Once we get the formulative number, what are the next steps that we'll be working on? The next steps we'll be working on is the retracement value, which is 22,349.05. Direction is bullish, plus 227.2 into 1.618. What is the number that we are having? The current number what we are having is 22716.65. Let's mark this number and check whether the market moved in the directions or not. In this scenario, we'll mark the number which is 22716.65. Where do we see the rejection point? We see a rejection point in above the gap up scenarios, right? With this scenario, where did the market take the rejection from? Same formula. We will look for an intermediate ratio 22349.05. Direction bullish. What is the formulative number? 227.2 into 2. What is the number that we are getting? 22803.45. Let's mark the number and check whether the rejection was in the same perspective or not. 22803.45. Do we have a rejection at the same point of action? What is the one thing that you will be seeing over here? The market tend to follow the rule, correct? There was a movement, post there was a movement. Calculate, double it, post the retracement, allocate the point of action. The supply is also continued in the same direction of the market's mathematical number. Remember one thing: the market will always tend to follow the rule. Without the rules, the market will never go in a direction. After multiplying, what do we notice at the current stage? What we see? We see exact intermediate ratio was our 150% rejection point. Right? This is how you look for an executions of the gap up or the gap down scenarios in the markets. With this, let's look for the next. As what do we notice? The previous mathematical numbers target was hit and market continued in the direction. We will allocate the same price of action with a different point of views. Right? How will you look into the different perceptions of the markets? This will work as your swing high, this will work as your retracement point, and this will work as your current swing low. And let's do the math and check where is the markets moving and where did the gap up open, right? In this scenario, what is the swing high? 22671.50 minus 22442.50. What is the formulative number that we have seen? 229. Post the formulative number. What is the retracement point that we are having? The retracement point is 22592.70. Direction is bullish. Formulative number is 229 into 1.618. What is the targets that we are getting? The target we are getting is 22963. Let's mark the action plan and check where is 22963.22. Where is it? The gap up, right? Exactly in the point of action. What did market tend to do? Market gave a breakup. Yes, market tend to give a breakup. Let's have a second confirmation onto the same. What is the retracement value? 22592.70. Direction bullish plus formulative number 229 into 2. What is the formulative number that we are getting at the value? 23,050. Let's mark and check where exactly the next plan of action is. 23050.07. Right? What did market tend to do at this point of actions? Made all the retailers sit towards the long, and market tend to take their hassle and continue in the same directions of the bullishness. This is how the gap ups and gap down works. Being the directions of the math, you guys will always be able to sit in the directions and you won't be having the fear in the night that market will open gap down or gap up. This works accurately in the markets. We have done it thousand times. We have done it in live. Live proofs are there in the live streaming. You guys can go and check. Previously, we looked for a gap up openings. In the same scenario, let's look for a gap down opening. Right? In the gap down opening, let's take the scenario one as this swing high, this will be as swing low, and this will be as our retracement point of actions. Right? With that, let's do the mathematical calculations and check whether the market is taking rejections and giving the gap down openings in our directions. At the current stage of action, what is my swing high? Swing high is 23048.90 minus what is the swing low? 22917.00 is equal to 131.9 is our formulative number. With that, what is the retracement point I'm having? 23019.60. Direction is bearish. So what is the formulative number? 131.9 into 1.618. What is the number that we are getting? The number we are getting is 22806. Let's mark and check whether that number is taken in the gap down scenarios or not. In the scenario, let's mark out the number and check. 22806.18. Where exactly do you notice the market is taking the rejection from? From the same point of action of the mathematical number. And do we have a gap down over here? Yes, we do have a gap down. With this scenario, let's look into the circulative of intermediate ratio with the same formula. Here, what is the step that we'll be following? 23019.60, direction is bearish, minus 131.9 into intermediate ratio 2. What is the formula that we are having? 22755.8. Let's check whether that number is working or not. With the action plan, what is the number that we are looking for? 22755.80. Where exactly the market tend to take the rejection from the same plan of action. Right here, what is the next thing? Anyone can do it for one time. It can be a fluke. Let's do it for the second time again and check whether the numbers get in the directions and whether the mathematical formula works, or with that plan of action whether we will get one more gap down opening. Right? The swing high will be at this point of action, the swing low will be at this point of action, the retracement point will be at this point of action. Okay, with that, let's do the math and check what are the numbers that we are getting. Swing high 23025.10 minus the swing low 22816.25. What is the formulative number that we are getting? The formulative number is 208.85. Right? With that, what is the retracement value? 22. 982.00, direction is bearish, minus 208.50 into 1.618. What is the formulative numbers final target? 22590.64. Let's check whether the math works again in the direction and the gap down opens in our plan of action or not. 22590.647, where exactly the market opened with the exact plan of action the rejection tends to take from the same point of view, right? With this point of actions, what are the next steps that we'll be following? Same plan of action, the next steps will be looked in the consideration of 22929.80, direction is bearish, 208.90 into 2. What is the formulative number that we are getting at the final? 22512. Let's check where is the next point of actions working in this scenario. 22512. Where exactly do you see the rejection perspectives? Exactly the second time also the market tend to close in our intermediate and golden ratio zones, right? Do we notice we do have one of the gap downs over here? Did we notice one of the gap downs over here? If you want, we will do one more time for you guys and check whether it works again or not to follow through this gap down, right? In the similar way, what are the price actions that we will be looking at this current stage? The price actions we'll be looking in the current stages are from the swing low will act at 2257.45, 517.45. The swing high will act as 22814.40. Your retracement point will act as 22625.70. With this plan of actions, let's calculate the swing high. 22814.40 minus 22517.60. What is the formulative number? 296.8. With the formulative number, what is the retracement value? 22625.70. Direction is bearish, minus 289.8 into 1.618. What is the formulative number that we are having? The formulative number is 22165.80, right? So let's mark and check whether our formulative number works or not. 22156.80. Where does market tend to close? The market tend to close at the same range, and we had a gap up opening and a continuity at the current point of actions, right? That's how you look for an execution of the trade in the directions of the market. I do know that not all of you come to watch at this point of time. So here are some tips for the people who are watching from start till now. TTS secrets for you guys to sustain in option markets for life. Step 1, select the premiums in the money, at the money. OTMs will be selected only in the add ons and in the directional moves. Step 2, no trades or TTS concepts will be used in accumulation zone. Step 3, selling pressure and buying pressures will be checked and used only in the directional move. Orders in POI nor in accumulation zone. Mathematical concepts should only be considered post the break of inducements. Remember one thing, guys, execute the trades patientfully, be in the directions of the math. Don't execute the trades in FOMO or in running candles. Remember one thing, fearless trading is only the key to your success. With that, follow the risk management. With the risk management, follow the emotionless trading. While winning, don't celebrate. While losing, don't be sad. Right? Carry the poker face and sit patiently till your target hits. Follow the rules, do the back testing, do the forward testing. With forward testings of relay bar, do the testing in live markets, then execute the trades. Don't execute the trades on someone's comments or someone's videos. Make sure you guys back test it first, forward test it. With forward testing, live test it. with live testing, then execute. If you like the video, do hit a like, share, and subscribe. Whatever doubts you have, do write it in the comments so that we can simplify it in the live streaming and help you out, guys, to understand it better. In the next part, we'll be coming up with how to execute the trades in the sideways zones and what are the steps needs to be followed. With that, we will help you guys to identify the stocks in the live market so that you will understand it's not difficult. It's just 2 minute process to follow. Hit the notification bell because the videos what you're going to be watching will not be shown or showcased by anyone in the YouTube. Thank you. Dhanyawad.